Green Street's residential research platform has been built over the course of 25 years. Our current team benefits from our unparalleled proprietary data and institutional knowledge. Our research involves both a top-down and bottom-up approach. Our current outlook for the apartment REIT sector is bullish from both a fundamental and a valuation perspective. Beginning with fundamentals, this cycle is now entering its fifth year, and the above-trend growth is expected to continue for the foreseeable future. Occupancy is at an all-time high, and rent increases to both new and renewing residents are greater than they were 1 year ago. Over the near term, our 2015 and 2016 revenue growth projections are above those of other forecasters. This strength is driven by several macro factors, starting with job growth, which is the primary driver of apartment fundamentals. Job growth in 2014 was the best since 1999, and this trend has continued early in 2015. Digging deeper into employment data, job growth has recently been outsized for the age 25 to 34-year-old cohort, which has a far greater propensity to rent than the rest of the population. Improved job growth for this cohort is unleashing pent-up demand. Today, 14% of young adults aged 25 to 34 are living at home with mom and dad. A reversion to the long-term average level of 12% would result in about 1 million individuals looking for a new home. The majority of these individuals would rent, and even if they double up, it would translate into a need for hundreds of thousands of apartments. We believe that apartment demand is sufficient to allow for the continued orderly absorption of new multifamily supply, which remains on the rise. The apartment sector can continue to fare well even if the single-family market improves. Following recent homeownership rate declines, the administration is focused on reviving the for-sale market, and mortgage credit is beginning to loosen. Also, we're keeping a close eye on the emerging institutional single-family rental sector, which is stealing some tenants from suburban apartments, but is a lesser threat than homeownership. Regarding valuation, our bottom-up approach centers around our proprietary asset-level cap rate model. Our review of recent trades, including the $3 billion Gables portfolio transaction, allowed us to conclude that apartment REIT cap rates have reached a new low of just under 5%. But apartments still look attractively priced in both the public and the private markets.